Welcome back to Future in Focus, a podcast on wealth and legacy planning. I'm your host, Antoinette Solomon. In this season, we've talked about building through ownership, growing with strategy, and scaling with intention. But today, we're focusing on protection, the part most people often overlook until it's too late. When we talk about wealth protection, life insurance often gets dismissed as something you only think about when you're older, sick, or planning for someone else's benefit. But the truth is, when used well, life insurance is one of the most powerful wealth building and tax planning tools available, especially for business owners, especially for our community. To help us break this all down, I'm joined today by Brittany Sanders. Brittany is a financial advisor with deep experience in insurance, retirement planning, and investment strategy. She's a multi time award winning agent, a strong advocate for financial education, and most importantly, she works with real people to create real financial plans. Brittany, thank you so much for joining us today. So, we're going to talk about life insurance with you. You are the life insurance lady. You were on Instagram as Miss Life Insurance. So, talk to us about life insurance. Just give us a general overview of what exactly it is.
Life insurance. Okay. So, life insurance initially is known for when I pass away, somebody else gets paid, right?
Mm-hmm.
It's kind of, in my opinion, it's kind of like the ignorant way of this is what life insurance is for. Um, it is it is there to be paid out as a death benefit. So, if people are depending on you financially while they're here and alive, you don't want to be a burden to your family financially even after you're gone, especially if you unfortunately don't pass away at an older age. If
Mm-hmm.
you have children and they can't take care of themselves, you want to have life insurance to still have money leave behind to feed them, clothe them, have somewhere to live, all the things you expect to pay for as parents, right? So, initially, life insurance is there to not be a burden financially. But there are other ways for you to use life insurance, other kind of life insurance products, where it's not just meant to be a death benefit after you pass away. It's meant to be an asset to you while you're here and alive, growing in value and equity, the same as home ownership.
Okay, I'm so glad you made that distinction because, right, most people think of it as just something that is just for the death benefit, not realizing how powerful life insurance and those different products are.
Mm-hmm.
So let's kind of break it down, right? Because I generally know there's like three different types of life insurance. So let's kind of break it down. We've got term, right,
Hmm.
which is usually limited to a specific time period. We've
Hmm.
got whole life, which is usually your whole life, and then universal,
Hmm.
right? So could you give us really the kind of intimate breakdown of what the key differences are for each of those products?
Yes. So term life insurance, I compare it to renting an apartment, right? It's temporary coverage. As long as you're paying for your policy, you have coverage. If
Mm-hmm.
you miss a payment or the policy can cancel, if you don't pay your rent, you don't have somewhere to live,
Mm-hmm.
right? So it's temporary coverage. It's there to take care of your temporary responsibilities in life. So, for example, if you have a term policy to replace your income to cover the time period between whatever age your kids are now and when they're adults, they're self sufficient. They don't need your income anymore. They have their own. You don't need that term anymore. Or if you purchase a house and you want to cover the balance on your mortgage, once the mortgage is paid off, that's not a liability anymore, right?
Mm-hmm.
So temporary policies are there to cover temporary needs.
Mm-hmm.
Whole life insurance policies, there's a whole wide variety of options there,
Mm-hmm.
different uses, but just in general, there are permanent policies. They never expire. They're designed to cover you as long as you live. I want to say this is very important. Just because the policy covers you forever does not mean you should be paying forever.
Oof.
So that's something I find more often than not. But it's there to give you permanent death benefit, but also have access to living benefits like cash value, dividends, and other kinds of riders.
Mm-hmm.
Um, Universal life insurance is kind of like a hybrid between term and whole life, where it doesn't grow. The death benefit stays level like a term policy. However, it never expires, just like whole life.
Mm-hmm.
So it comes with a level death benefit, and there are options as well where you can have living benefits, access to cash value and dividends, depending on if the company is a stock or mutual company.
Okay. All right. Well, that was helpful. So let's break down uh I like how you said term is really meant to cover specific life events.
Mhm.
So for example, if you own a house, right, you may
Mhm.
have a term policy for 30 years that could cover your mortgage. So in an event where your untimely passing,
Mhm.
that life insurance policy kicks in, covers your mortgage. Now your house is paid off, and your family doesn't have to think about that extra payment or the loss of your income that was covering that payment. So I
Right.
like how you made that distinction. Now, let's talk about the universal life, right?
Okay.
The mystery of the universal life policies, right? We all are on social media and we see the IULs, the TikToks and the little catchy videos,
Mhm.
but let's dig into the IUL and how people really use that cash benefit and how we can be smart about potentially leveraging that cash benefit. So can you elaborate on that a little bit more?
Yes. So I might get some flack for this with the IUL. It's not the most amazing product since sliced bread, okay?
Mm,
It is a great product, but when used properly.
mhm,
IUL is one option when it comes to permanent universal life policies. There's index universal life policies, and there are also variable universal life policies. So an IUL is a policy where you grow cash value in the policy, and the growth is dependent on following a specific index in the market. For example, you can choose the S&P 500,
mhm,
right? So the benefit of an IUL is that you get all the gains of the market, but there's a floor rate and you don't lose when the market is down.
mhm,
Yes, that is a benefit. However, the insurance company is giving you a cap rate. So if
mhm.
the market is up, I don't know, 20% this today and they give you a cap rate of 9, you're only getting 9%. So
Mm.
historically, the S&P 500 is always up more than it's down,
Mhm.
right? So how often are you really getting
The
most of
full
those
value,
gains,
yeah.
right? Typically you're not. When you have a variable universal life policy, you are literally getting all the gains and losses of the market you choose to have in your portfolio within that policy.
Mhm,
There's two separate accounts in that life insurance policy, a general account and a separate account. The separate account is what's being invested. And obviously it comes with risk. Any investment comes with risk, right? But we have like 80 plus fund families to choose from, and I can show my clients this is how long this fund has existed. This fund has been around for 20 years, 30 years, 40 years,
mm,
and this is what it's done. So even with these couple years of losses, the growth is astronomical, right?
mhm.
So it's more of a benefit for someone who really wants growth from their policy to have a variable universal life as opposed to a cap rate and a floor rate.
Okay, so that was an amazing breakdown of the variable universal life policy. So let's talk more about the cash benefit of that, right? Because I know people wanna know, well, how can I use life insurance now as opposed to waiting for it to kick in for the benefit of my family? So let's talk more about that.
So, cash value is a living benefit, right? Where you can pull money out of your policy without any tax liabilities while you're here and alive.
Mhm,
This applies to the IUL, the VUL, whole life policies, even if it's a select paid up whole life policy. They all have that option. Um, how the cash value grows is very dependent also on if the company is a stock company or a mutual company.
mhm,
If you're working with a stock company, the cash value can, it can gain or lose, right? Because you're dependent on the market. Having a policy with a mutual company is more in the client's best interest because you have that safety and guarantees that your cash value will not lose money from it,
mhm,
and you pretty much are in control. Right, on social media, they have that whole be your own bank concept,
mhm,
and that's where it comes from. So you're able to make withdrawals out of your policy, and as the owner, it is up to you if you want to pay that money back or not. And that really is a discussion you should have with your advisor because you and I can have the exact same policy, but use them totally different ways. So if I know that you're more focused on legacy planning, leaving money behind, kids, grandkids, leave money to a church, whatever your mission is, right?
mhm,
You're welcome to pull money out of your policy, but if you say, I want to make sure I leave at least 300K behind to XYZ, I'm going to tell you, okay, Antoinette, don't pull out more than this amount because that will bring your death benefit below your goal,
mhm,
right? If I'm if I don't care about my death benefit, I just want to, pay for the burial and the rest is for me,
Mhm.
there really isn't a need for me to pay back that cash value because there's no tax penalties. They'll just take it from my death benefit
Mhm.
and my beneficiaries will get the rest.
Mhm.
You can take most of your cash value out at one time and we'll never let you have a situation where your death benefit is depleted.
Okay.
Because there's guidelines, there's a tax code 7702 is the reason why the withdrawals are tax free. And there's a guideline on how much you can either overfund your policy or pull out of your policy per year.
Okay. Wow. That is so you're saying we could pull tax-free money out of some life insurance products.
Yes, that is
Wow.
correct.
Okay. So, say for example, I have a $500,000 variable universal life policy,
Mhm,
right? It's gaining a cash value every year.
mhm.
Can I take multiple distributions? Is it a one-time thing that's tax-free? Well, how exactly would that work?
Whatever your cash value has grown to, you can pull that money out however you please. So if there's still some left over, you took a distribution out this year and there's still more left over, you can take more out next month. There aren't limitations to the account like, like Roth IRAs or 401ks where there's certain limitations on what you can and cannot do. The life insurance policy, you're in control.
Mhm.
Also, it's the reason just kind of going back to the variable universal life having the investment component with the traditional whole life policies, you can pull out money the same way. But normally when you invest in the stock market, you're going to pay capital gains.
Mhm.
Because the VUL is a life insurance product, you're able to make those withdrawals tax free,
Mhm.
not like your regular investment accounts. So it's a
Mm.
way to diversify your portfolio, not just diversifying where you're putting your money, but diversifying how am I getting taxed on these products.
Okay, so it's also a tax strategy.
Exactly.
Oh, this is amazing. So, I hear a lot about pulling out the cash value to use it for things now.
Mhm.
Is there a situation where pulling out that cash value could deplete the value of the policy where it could potentially lapse? Like what's the risk of pulling out this cash?
Um, there really isn't much risk pulling out the cash value. Again, it's just based on like what your needs are. You won't deplete your policy, but you can bring it close to, close
Mhm.
to nothing where it's just, burial coverage left.
Mhm.
But there really aren't any penalties for pulling out all of your cash value. If that was your plan from the beginning, for example, you might get a policy and you don't touch it at all for 30 years or whatever and then you're paying yourself a part-time annual salary from your policy and when you're in your 80s you depleted it but
Mhm.
you're okay because you have whatever pension social security stuff like that.
Yeah.
There's no problem with depleting it because you used it as planned. You used
Mhm.
that as a part of your retirement income alongside with your 401k investments, whatever else you had for retirement.
Mhm.
So there's really no penalties for that.
Okay. So that's why legacy planning and being upfront with your advisor and
Yes.
your attorney and all of these different,
Mhm.
service professionals matters, right? Because if you have if you have a strategy for how you want your life to look and how you want to support your family, all of these people need to be having conversations together. That's your accountant, your estate planning attorney, your
Mhm.
financial advisor, life insurance agent, so that we're all clear on what the goal is and make sure that you're continuing to push towards that goal, right? Like that's why y'all pay us, right? Like that is the point of paying us. So let's switch a little bit from the life insurance agent, right? Because I don't want people to just think of you as that.
Mhm.
There's also a financial advising component that not, a lot of people realize. So do
Mhm.
you want to get into that a little bit more?
Yes. So real quick, I will say one thing about the taxes. So life insurance in general is federal and state tax free. It is not estate tax free. However, that is
That's
only
very
for
clear. Say that again.
estate tax free. The life insurance is not. But that's for super 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 high income earners where they have
Hmm.
a net worth. They changed it. It's either 11 million or 14 million, but
It's 13.
13 now. Okay,
Hmm.
yes, they changed it. So, I just wanna be clear that there is technically that exists, but doesn't apply to most
Yeah.
working people, right?
Hmm.
Okay. Um, so yeah, so life insurance is not, all that I do. I am a financial advisor, right? So, a lot of times people come to me and ask for help with, growing their money and investing.
Hmm.
Absolutely, I'm happy to help. I have to assess if you're in a position to do that comfortably financially. And that starts with your foundation. Your foundation includes, do you have emergency savings? Do you have life insurance to protect your income? Do you have disability insurance to protect your working income? Right? There's certain things. You have your will and estate documents in order.
Mm.
If your foundation is not solid, even I kind of go back to a house. If your house, if your foundation is sand,
Mm.
the building's not going to last,
Exactly.
right? So you don't want to invest money and take risk if you don't have savings. And then, for example, you have to fix your car transmission and you're pulling out the market at the wrong time and losing way more than you should have,
Mhm.
right? So, I kind of do holistic financial planning. I kind of assess, where are you in life? What's important to you? What are your goals? Personal and business will be a separate conversation. What do you already have in place? And then what kind of products or services do we have to help fill in those gaps? And if they have an accountant, a CPA, an attorney already, then I do communicate with them as needed to make sure that we're all on the same page and so that we're all doing what's in the best interest of the client together.
Okay. All right. So I'm a small business owner,
Mhm.
right? I know a lot of our viewers are probably small business owners. A lot of my clients are small business owners. What's the first step for us? What would you advise that we do first?
Business owner, as far as just planning in general or life
Yes,
insurance.
like both. Like how would you structure I'm a small business owner. I make 500 grand a year.
Mhm.
I've got employees. This is the sole financial support for my family.
Mhm.
How would you advise me? What would that look like? First step.
So a couple different things, because a lot of my clients are small business owners as well, and it kind of varies depending on if that person has a family or not. If you do have a family, I'm going to start with, yes, you are a business owner, but the personal things have to be in order to not affect your business negatively,
Mhm.
right? So going back to that foundation, do you have life insurance, disability, those basic things in place in your personal life? And then now that you're having starting a business, do you have a business succession plan in place specifically? What does your 1 year, 3 year, 5 year plan look like to get to that, that higher growth stage?
Mhm.
That's very important, especially if they're going into it with a business partner. Having a buy sell agreement in place,
Oh,
because
yes.
let's say you and I are, I don't know, we own a bakery, and your husband is doesn't care about the bakery. He's a mechanic, and God forbid you pass away, he doesn't want to help me run the bakery.
Mhm.
That's going to affect the business negatively, and it'll be easier just for him to, pay him out his cut, and then the business has what we need, right?
Mhm.
So just things like that people don't really think about in the beginning. And also, depending on if you have employees, there are certain states with regulations on, having to offer certain benefits, things like that. So kind of just checking all the boxes as far as protection. Um, Also, whether you have a family or not, most people focus on reinvesting all of their profit back into their business. Not the worst strategy in the world, right? You have to spend money to make money and to grow marketing, things like that. But you also want to take a portion now to pay your future self, right? You want to invest some of your money. You want to put money into an account that's going to be growing whether you make deposits or not at some point, right? So just thinking about and when you start a business, it's hard to think that way because you
Mhm.
just started, but we all want to stop working at some point.
Mhm.
So you do have to pay your future self. And as an entrepreneur, you don't have, a corporation giving you that 401k and those benefits. So you have to kind of take time to do it yourself.
Mhm.
And that's where it comes in as a benefit to work with a financial advisor, because we can kind of hold your hand through the process, make suggestions, and kind of hold you accountable for reviewing every year as well.
Okay. No, well, that was helpful. So let's talk about some of the myths, misconceptions, things like that about life insurance. What's the most common misconception you see people have about life insurance?
Okay, let me pick one.
You can
It's a
say a
few.
few, right? So,
Okay.
like, so they if they know it, I mean, if they think it, they can be like, all right, let me check that. Maybe I call Brittany or somebody like her and get my life together.
One myth that really bothers me is getting life insurance on my child is it's a jinx.
Mm.
That truly bothers me. I'm a boy mom, you know this. So I mean, my kids have life insurance. It's not a jinx. I'm literally helping them set their future up, and they won't start their adult life from zero, right?
Exactly.
So, my kids are not going to pass away anytime soon,
Yep.
right? It's not about that. But because life insurance, the payments are based on your age and your health,
Mhm.
they're super young and super affordable. And I don't spend a lot of money, but it will grow for a long time. Whereas I started my cash value policies as an adult, right?
Mhm.
So for me it was like a no-brainer. Um so that one myth kind of bothers me. The
So
other go ahead.
that goes back to earlier, right? In the intro season, we talked about scarcity versus strategy, right?
Mhm.
Like having this thought that it could jinx my children or anything like that is like this sort of scarcity mindset that we don't belong, we aren't
Mhm.
worthy of building that wealth, as opposed to thinking of it as a strategic tool where, like you said,
Right.
your kids aren't started from zero, right? They're young. And so these policies are just going to continue to accumulate as they when they hit college age, they'll have college be able to be paid for, or at least, most of it paid for. And then whenever they want to go buy a house, there will be money to buy a house. Like they'll, at
They,
points in their life, there will be a sort of bank, right? Their own bank for themselves. Maybe they start making real estate investments. Maybe they start their own business. But that is what we talk. That's what we're talking about when we talk about plan strategically. You
mhm.
want to make sure that you're talking to people like me and Brittany, and you're being clear about what your goals are so that you aren't missing some of the benefits of what we're talking about in these conversations. I'm so
Exactly.
glad you brought that up.
Sometimes I say remove the word life insurance from this product and focus on what is it actually doing for you.
Mhm.
If it's checking all the boxes, that's what you should be focused on,
Yep.
right? I feel like when it comes to just like life insurance and financial literacy, it's never too early. You're never too young, right? So both of my kids, 9 and 15, they have life insurance policies, and we have a plan. You were saying be strategic, right?
Mhm.
So the plan with those policies is that when my oldest graduates high school, we're pulling cash value out so he can buy a rental property,
Yep.
right? Because I don't want him focused on trying to make money at work when he should be in college focused on school,
Mhm.
right? There are things that we have in place, even with investments. When my son turned 10, we opened a brokerage account, right? Most people don't even know you can do that at that young age. You don't have
Mhm.
to be 18 to do everything.
Mhm.
So, and what I see is that, what I see kind of more often, like our black and brown communities, is that we're not always thinking about um, being a little more open minded with these products,
Mhm.
right? Just life insurance, just getting a get enough to bury me, and that'll be good enough. And a lot of times it's not enough.
Yeah.
$10,000 is not happening anymore.
Mhm.
If I have someone who comes to me for a burial policy, I'm like, don't go less than 25,000,
Yeah.
because I've experienced paying out death benefit claims. I've experienced a mother crying in her car calling me because she didn't first of all, she didn't want the check because her son died. But
Mm.
also it wasn't enough.
Yeah.
Right? And so we have to just think a little bit bigger about why we're doing things and what we want the outcome to be, and always realize that doing a little bit of something is better than doing nothing.
Oh my God. Thank you so much for that, Brittany. So we're gonna wrap this up because we could be here for hours. I'm telling you, we could literally talk about this all
We
day.
probably
Like
could.
we probably do a part two in season two. So don't be shocked if you see Brittany again. So what's next for you as a financial advisor, life insurance agent, New York life extraordinaire, award winning? What is next for you? How is your legacy planning looking? What's the next steps in your journey?
Next steps right now. So I do actually have my LLC outside of New York Life. So this year I'm working on my DBA.
Mhm.
I'm working with partnering with different school districts and universities to do financial literacy workshops
Oh
inside of the
yes.
schools.
Hmm.
I feel like again, I'm a big youth advocate, so for me, I want to be able to educate, do some workshops in the schools so that when they go off on their own to college or just as adults, they have some knowledge. They have some hands-on knowledge, not just like I heard this on social media.
Hmm.
This is what I should be doing. So just being involved in the community and just expanding my services as far as helping more people, especially small business owners, get on the right path with financial planning, having advisors that they trust. Some people really don't know who to go to and they just Google people.
Hmm.
So the more people I meet, that's more people that I can, help one at a time.
Okay, well, that
Hmm.
sounds great. Brittany, thank you so much. Your insight today really helped shift the way we think about life insurance, not just as a product, but as a strategy. You made it clear that protecting what we build is just as important as building it in the first place. And to everyone listening, I want to strongly reiterate that life insurance isn't just about preparing for what happens if you're gone. It's about making smarter moves while you're here. It's about having options, flexibility, and peace of mind. If this episode resonated with you, please share it with someone you care about. Make it a conversation, subscribe to the show, leave a review. It helps others find this space. This is Future in Focus, a podcast on wealth and legacy planning where strategy meets legacy. Until next time.